How many of you have heard of EPAct, or the Energy Policy Act of 2005? How many have taken advantage of EPAct for the lighting retrofit that they did? It's a pretty complicated topic. There's a lot of confusion in the marketplace. At the end of the day, you get your tax incentive. And to sweeten the deal, they put in some energy efficiency tax provisions, one of them being the extension of EPAct. And so we got extension all the way out to 12/31/2013. It incentivizes three different areas. It incentivizes lighting, HVAC, and the building envelopes. It's for new construction, it's as well as existing building retrofit. And lastly, it's available for tenants as well as owners. It depends on who is the economic owner of the energy efficient improvement. Okay? What matters is who paid for the energy efficient improvement. That's who gets the tax savings. This tax incentive is based off of square footage. So the bigger the square foot, the more tax savings you get. So what are we talking about dollar-wise? Let's say we have a 300,000 square foot building. If you can get that building to qualify for the whole building, you have the potential for a $543,000 tax deduction. The DOE says there might only be 400 buildings in the entire country. So luckily, they split it up into three subparts. The three subparts being lighting, HVAC, and building envelopes. And lighting is the lowest hanging fruit. Lighting is the easiest by far to qualify for. Most of our work is in lighting. To qualify for tax savings, you have to show that your building performs better than a standard. And the standard they selected was ASHRAE 90.1 2001. Lighting, low-hanging fruit. HVAC is doable with specialized technology. Building envelope is the Las Vegas method, which is blow up the building and start over. So the value of the tax incentive is $1.80 per square foot for the whole building. Luckily, they split it up into three subparts: 60 cents a square foot for lighting, 60 cents a square foot for HVAC, 60 cents a square foot for building envelope. New construction is really where, if you really want to think about it and put a lot of energy in design, you can get this target. Luckily, they broke it up into three subparts. We have building envelope, lighting, and HVAC. There are two alternatives, so you'll see 1, 2, 3, 4, 5, 6, 7 ways here. Now, the key with these 7 ways, and once again, as I mentioned before, these 7 ways, we only do 2% of our work. LEED requires modeling, but most people don't model their buildings. And these 7 ways require that the building be modeled. In order to get the tax savings, you have to model and show these percent improvements. That's where you're showing the percent improvements. It's not by measuring and verifying that your building actually has these percent improvements. It's by modeling your building. And modeling is very expensive. We never recommend modeling for tax savings. It's just too expensive. Modeling just for tax savings, you're throwing a lot of money out. Luckily, there's an 8th way to get tax savings. The lighting industry was at the table when the legislation was written. So they got a special way to get tax savings, and it's completely prescriptive. It doesn't require modeling. You can do it on a spreadsheet. You can do it in ComCheck. You can do it on the back of a napkin. It's completely prescriptive. It's watts per square foot. Your watts per square foot are better than the standard. You can get tax savings. So where are the benefits? Lighting, lighting, lighting. If I haven't made the point yet, lighting is where all the benefits are. I'm going to talk about that lighting. There's a standard in ASHRAE. ASHRAE 2001 90.1 has a lighting standard for all sorts of building classes, and it's in watts per square foot. The wattage of all the fixtures in the space divided by the square footage of the space. So for example, an office building has a 1.3 watts per square foot standard. Okay? You get no tax savings for meeting the standard. To get tax savings, you have to have an improvement over the standard. And the improvement that's required is a 25% improvement level. What type of buildings mainly do we have here?
Unfortunately, mostly office.
Office? Museum, okay. School? Hospitals. You need 0.975 for an office. For a school, you would need 1.125 watts per square foot to start getting tax savings. 40% improvement level gets you the full tax savings. So you need 0.78 for an office, 0.9 for a school. What you'll see across the bottom here is that the tax savings is completely ratable. So whatever percent improvement that you have, that'll be the actual exact tax deduction that you'd qualify for. Now, because the lighting industry got this other way to get tax savings, they put some added requirements. One of those added requirements is you have to meet the minimum IESNA light levels. You can't put your facility in the dark and get tax savings. You have to actually light the space. You have to have a minimum light level. Now, what we found is that most of our country is over-illuminated. So we haven't had any problems meeting those minimum light levels. The next is you have to meet the other ASHRAE requirements. Okay? We haven't had any problems meeting those because those ASHRAE requirements happen to be embedded in almost all the building codes in our country. It's an income tax deduction. Basically, lighting is building property. Lighting is building property, so when you buy a lighting system, it's a capital improvement, and you need to depreciate it for 39 years. So you get to take on your tax return 1/39 a year for 39 years. Okay? Very minute amount of value on your tax return. What EPAct does is it moves all those 39s to an immediate deduction, up to the 60 cents. So you get to compress 1/39 a year for 39 years, you get to compress it to an immediate tax deduction. That time value of money, instead of 1/39 a year for 39 years and taking it immediately, that's where the value of EPAct comes from. Tremendously valuable when you can expense something as opposed to depreciating over time. This is finance, not romance. So it's energy savings is the first, rebates is the second, tax savings is the third. This is a financial decision. They added a specific tax requirement for bi-level switching. So every space, except a few exceptions, needs to have bi-level switching. For government buildings, the primary designer of the government building can get this tax incentive. Hotels have a specific advantage. The first advantage is that hotel and motel guest rooms do not need bi-level switching. This is every category in ASHRAE. Okay? The first column in is ASHRAE 2001. That's the baseline, no tax savings for meeting ASHRAE 2001. The next column is a 25% improvement level. Oh, yeah. 25% improvement level is where you get 30 cents a square foot. That's where tax savings start. The next column after that is a 40% improvement level. That's where tax savings maximizes at 60 cents a square foot. The column I added after that is ASHRAE 2004. ASHRAE 2004 has nothing to do with the tax law. Okay? It just so happens that ASHRAE 2004, or its equivalent, is the building code in 35 states. Okay? So you'll notice this last column has a bunch of X's. Anywhere you see an X is a building category that just by building to building code, you're already in the watts per square foot zone for tax savings. There's 35 states now that have stricter codes than ASHRAE 2001. What I urge you is to act. If you have these old inefficient technologies, there's acting will save you money. Not acting will cost you money. Tax is like icing on the cake. The reality here is the reason you retrofit your lighting is for the energy savings. The energy savings is repeatable, meaning every year you have the new lighting system is another year that you're more efficient than the old lighting system. So it's an annual savings that you receive. Let's take 2-year payback. A 2-year payback means a 50% return. The magic with the tax savings is placed in service date. So it's per building, and it's per building placed in service date. We highly recommend do the whole thing. I mentioned 98% of our work is lighting. Of that 98%, I would probably say 70% is taking metal halides, replacing them with high bay fluorescents. Metal halides are 455, 458 watts. High bay fluorescents, 234, 235 watts. You're cutting the electric use in half. You're increasing the CRI, the quality of the light, and you're maintaining the amount of light. And in some cases, you're actually increasing the amount of light. It's win, 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 win all the way around. Across the bottom, as Sean has mentioned, there's still a lot of T12 lighting out there. That can be replaced with reflecting technology, with T8 technology. Once again, basically cutting the electric use in half. We produce a tax package as our end product. It covers all 8 requirements of the IRS. It also comes with what we call audit assistance. Tremendous tax credits available for renewable technologies. This is a long list of all the different tax credits available. One of the unique things that the Obama administration passed back in February is that instead of the tax credit, you can get a grant now. So you can get a grant instead of the tax credit, meaning you can get a check right up front. Tax deduction is one thing. A credit is dollar for dollar. If you get a $1 credit, it's $1 in your pocket. A grant is even better because there's a lot of people there's a lot of companies out there hurting now that don't have taxable income. They could still get the grant, but a tax credit would be worthless to them because they don't have any taxable income. My email is Jacob, I don't know why I didn't update the presentation. It's jacob.goldman, Goldman. Unfortunately, there's three chances here. There's commercial buildings. On commercial buildings, the commercial building owner gets the tax incentive. Government buildings. On government buildings like federal, state, federal offices, military bases, K through 12 schools. On government buildings, the primary designer gets the benefit. Not-for-profits are left off the table, unfortunately. Churches, American Red Cross office buildings, private universities. Unfortunately, no tax savings for anybody.